Good evening, traders and investors. Will back here with another one, coming to you with a Monday market recap. Hopefully you guys had a very good day in the markets today, and hopefully you had a beautiful weekend as well. And in today's action, well, despite the fact that the SPY and the QQQs closed at brand new all-time highs, the entire market was kind of a bit mixed today. Several sectors really outperforming, but other ones really lagging behind. Today was another day in which we focused largely on big tech and data center expansion. We had one big piece of news come in here today, which was NVIDIA investing up to $100 billion in OpenAI, linking two artificial intelligence titans. That news came out pretty early in the morning and led to an increase in NVIDIA stock, which was quite massive at the time. Now, in terms of the gist of this deal, here's what Sam Altman had to say. Everything starts with compute. Compute infrastructure will be the basis for the economy of the future, and we will utilize what we're building with NVIDIA to both create new AI breakthroughs and empower people and businesses with them at scale. So once again, guys, NVIDIA really throwing that money around. Last week, we had the $5 billion investment into Intel, and now $100 billion into OpenAI in a bit of a circular deal. NVIDIA is going to invest in OpenAI stock and other cash considerations, and in turn, OpenAI is going to use that cash and purchase NVIDIA chips, which pretty much comes full circle. The two companies signed a letter of intent to deploy at least 10 gigawatts of NVIDIA systems for OpenAI and said they aim to finalize the partnership details in the coming weeks. The power for those chips is equivalent to the needs of more than 8 million US households. So today was largely a day in which a lot of the price action to the upside was focused on either the data center specific plays or really auxiliary plays around the entire trade. APLD, Iris Energy, NBIS, CoreWeave, some of your biggest winners, but even some of the smaller names such as Bloom Energy having another fantastic day after really rallying hard right here. A lot of these energy specific plays such as Constellation Energy had a very beautiful day. Names like VRT also having a very beautiful day as well, because a lot of the focus today was on the data center infrastructure and or applications and or the power behind the entire data center segment. Other than that, though, if you take a look at the rotation was not the best today. A lot of the, price action was focused really on semiconductors and those data center plays. But when we take a look at the heat map right here, you'll see it was a very mixed bag all across the board. Several companies performing really well today, but a big portion of the market having some pretty steep declines. So in today's video, guys, we're going to take a look at a few key things together. Since there's no news and no earnings to speak of, we'll just get right into the charts. And we're going to start off with our technical analysis rundown on our major market indexes. Check on the rotation. Where is the rotation? Where is the rotation lacking a little bit? And as a result, can we position into possibly the leading sectors or possibly even the lagging sectors? Thereafter, we will do the same thing, taking a look at this big tech list right down here. We'll derive whether or not some of these companies are at attractive swing trade locations and or long-term portfolio buy locations. Then towards the end of the video, of course, we'll go through everybody's favorite section, the biggest gainers and losers of the day, which as per usual, there were many. So we'll take a look at which one of these stocks or which many of these stocks were performing really well today. Can we chase them without too much risk, or are they a little bit too extended right now? And to the downside, you can see that there's a lot of plays here, and especially a lot of interest rate sensitive plays after last week's FOMC, in which we did see a rate cut of 0.25%. But also the Fed confirming 2 additional rate cuts for the end of the year. That being said, since that happened, you got a lot of these interest rate sensitive plays which have only gone down, which is a bit counterintuitive and does defy logic a little bit, but I will explain that when we go over the TLT and the yield segment of the video a bit when we are further on in our index analysis. And then at the very end of the video, guys, I'll give you guys a portfolio update. What trades did I make today? Which trades am I carrying into the rest of the week and the rest of the year as well? So it should be a very fun video, guys. Let's jump right into the action right away, shall we? The S&P up 0.47%, very strong day, brand new all-time high. And the QQQs up 0.48% as well. But coming back to the rotation, you will see that not all sectors were made equal today. We had some really nice performance from Apple, Oracle, NVIDIA, a lot of the semiconductor plays, and Tesla. But the other half of big tech, Microsoft, Amazon, Google, and Meta, getting a little bit left behind. Software additionally had some nice gains, but some segments of that market were a bit mixed. The banks and financials also a little bit mixed. Healthcare, same concept. Okay day for healthcare, but very mixed across the board. And the bottom half of the market, the interest rate sensitive ones, also very mixed. So a lot of rotation going in and out of some of these names and just big institutional repositioning after the Fed meeting of last week, in my opinion. Now, on the one-day relative performance, you can see that even better to where technology kind of ran away with the entire show today, followed thereafter by utilities. A lot of the electric plays or electricity plays performing really well today. Materials were up, industrials, healthcare, and energy. And to the downside, consumer defensives, communication services, and consumer cyclicals sadly suffering the blow to the downside here on the 1 week relative. Where do we stand right now? Still in a very healthy and relatively broad market. Technology once again running away with the show on the 1 week relative, and the whole rest of the market not doing too poorly, except for real estate and consumer defensives, which have really started coming down for different reasons. Real estate, we'll explain in a little bit. It has to do with what the market was anticipating for rate cuts in 2026 versus what the Fed projected themselves. That's why real estate is down a little bit. And consumer defenses, you can kind of dumb this one down to the fact that people are pivoting away from value and really pushing into growth. Small caps, mid caps, and technology-centric applications, especially those data center ones, which are running excessively hot. A lot of people trying to play catch up, even though those names are up a lot already. So that's pretty much it for your market preview. In terms of the charts, let's jump right into the action because we don't really have much news to cover. A few key pieces that we will have to pay attention to though for the rest of the week. In terms of macro, we got a whole bunch of Fed speakers. They'll be giving their commentary on the summary of economic projections that the Fed released last week, of course, and their own opinions into the direction of the economy, the direction of inflation, and so on and so forth. Other than that, tomorrow morning, Tuesday, we have manufacturing and services PMI. Going to give us a good indication into economic activity. On the Thursday session, you have your finalized Q2 number for GDP, which should be coming in at the same 3.3% that we've been getting in terms of projections for the last 2 months, so no change there. Then on Friday, arguably the biggest day of the bunch, we get the PCE numbers in terms of inflation, the Fed's preferred gauge. It's supposed to come in at 2.9%, which is the exact same ratio as last month at 2.9% as well. You might deem this to be a little bit high, and I would agree. CPI also climbing up there, but my preferred tool here is going to be the Trueflation Index. This measures 15 million different goods across 30 million different data points, updated on a daily basis. So obviously the basket of goods and services is much more broad in this analysis than it is in the PCE and or CPI. And you can see right here, we're currently sitting at a very cool 2.09%. So the effects of the tariffs on inflation are not so much felt across a wide range of products. And this is a better sense, it gives you a better gauge of are consumers really feeling it? Because never forget, guys, sure, there is some inflation on some goods and some services, but there can always be some substitution effects to where if something has gone up too much in price because it has been affected by tariffs, consumers can often find substitutes to that good or service for pretty much the prices that were before or something that has not been affected by tariffs. So please keep that in mind. So in terms of the technicals, guys, we're going to run through these pretty quickly because I want to cover as many charts as humanly possible in terms of individual names, because I guess you guys are getting pretty anxious in terms of the performance of some of these names. So I'll try to cover the most of them towards the end of the video. The SPY, I mean, very nice price action here. Daily uptrend. We're setting small little shelves on the way up. As you can see, the daily higher lows right now are 654.30. So any pullback, we'll just be looking for a new higher low for possible further trend continuation. Further below that, we have a nice tiny little shelf here, 651.50 to 647. But the bigger weekly level, of course, remains down here, 640 down about 635. Now, I will be the first to admit that we are running a little bit hot right now in terms of the Qs and in terms of the SPY. You can see here that we're kind of extended right now from the 12 EMA. And these indexes are not growth names individually, right? They are indexes. So usually you do not pull that far away from the 12 EMA without getting a pullback. So we're going to keep an eye on what could be the possible trigger for said pullbacks into the next few weeks, as right now we are running a little bit hot. The weekly RSI is getting into overbought territory, but we know that can stick around for a while, and the daily RSI as well is getting into overbought territory. So constantly on the watch for what might be the next pullback catalyst. But if we do get a pullback catalyst, in my opinion, it'll be a healthy pullback in the context of a very nice bull market. Onto the QQQs right now, same analysis stands for the Qs. Beautiful daily uptrend with the new higher lows being set after the Fed day last Wednesday. That level is right now 584, 585 roughly. Any pullbacks looking for a new daily higher low for possible further trend continuation, and in the event that you unwind, well, once again, just remember you have a nice little shelf of support down here, 581.50 down to about 575. It's a temporary level. Obviously, the bigger one is all the way down there, 562, but we're fairly ahead of that right now. The 12 EMA is curling up into the most recent zone of price action. So in the event that we get some form of a pullback and the markets need to retrace and come back to the infamous 12 EMA, which is your short-term momentum gauge on these, well, the pullback would be very healthy in my opinion, and would also be a very nice buying opportunity for some of our favorite companies, or maybe some companies that just have not gotten the same type of love that other ones have gotten, like NBIS, like Iris Energy, like all of the data center plays, which are up, it seems as though they're up 5, 6, 7, 8, 10% every single day for the last couple of weeks. So keep that in mind. Moving on to financials right now. Financials not looking too bad today, but still not quite breaking out. So the price action is a little bit timid here on price on the financial segment. If you take a look at the line in the sand level, 53.30. If you lose that, sadly, you lose the daily uptrend, and you might just be going into more weekly consolidation. It's been consolidating sideways for a better part of the last 3, 4, 5 weeks at this point in time. No red flags, though. We might just be looking for a further backtest of this 12 EMA down there. The monthly chart is probably the clearest time frame of them all, and you can obviously understand that in the event we do get some further pullbacks on financials, definitely a buying opportunity, especially if you make your way back to 52 down to $50. Not a bad entry opportunity. But that being said, there are some companies in financials that are very attractive right now. Number one is Visa. Visa down here, 340 to 330, easy support area to be playing off of, whether you're doing short puts or possibly some directional plays. Very nice price action on Visa. We got some very nice price action on Berkshire as well, going for the infamous breakout, retest, and possibly looking for the continuation of the run with your weekly MACD trying its best to build some momentum to the upside. Not too bad though for level to level trading, looking pretty good for some expansion right there. And then of course, as of last week, we had all the ones that I covered on the channel briefly. Companies like SPGI down a lot, and that was a result of FactSet earnings really coming to the downside. And I was saying last week, guys, FactSet, phenomenal company. Going to be very tough for them to lose their big competitive advantage overnight. Fantastic company, but right now I do agree a bit of a falling knife, but I do believe that buys in terms of shares, especially for long-term portfolios, will be rewarded down here. And the same thing can be said about a company like SPGI. Such a strong player, such a wide moat company with many competitive advantages and a diversified business. I do think SPGI is indeed a buy into this entire consolidation range. Call it, low 500s all the way down to about 480, the same area that the stock was kind of accumulating for the past, let's call it 9-10 months of trading. Same thing could be said about a company like Moody's Corporation, also pulling back within the confines of its previous consolidation range. All of these companies are very strong companies with big competitive advantages, recurring subscription business models as well, and very high profit margins. So it is very interesting to give them a chance during what I believe to be an unwarranted sell-off that is just a little bit overdone, so keep that in mind. Moving on to the XLV healthcare sector right now, still not quite breaking out, kind of trapped in this consolidation range, at least for the past month, it seems like. That being said, on the weekly time frame, which is the clearest one in my humble opinion, it's still a nice engulfing move with a bit of a bull flag here, looking for the eventual expansion run. One thing's for sure, in the event the indexes continue to remain bullish in a nice bull market, healthcare will catch up, but it's a bit of a slow trade, and I'm pretty sure all you guys know that by now. Next profit target, of course, is 145 all the way up to about 149, the next resistance range for any positions which were accumulated at these lower levels. Moving on to SMH right now. SMH, very solid day, of course. Well, that's pretty obvious when you have NVIDIA up 4%, Broadcom down a little bit, and that's just because the OpenAI news. There had been some news before that OpenAI was working with Broadcom to develop their own custom chips. I know, of course, when you have NVIDIA throwing $100 billion at OpenAI and OpenAI buying NVIDIA chips, it raises the question, well, how many chips is OpenAI going to actually need from a company like Broadcom eventually, right? So that's kind of why Broadcom was down. Broadcom's still a super solid company, guys, over and above everything. On to the semiconductors ETF right now. We are pulling away and running running a little bit hot here on the shorter term timeframes. Daily looking solid, but now we're really into kind of exponential expansion territory. Any pullback, guys, anything above 301.54, looking for a new daily higher low for possible further trend continuation. Nice breakout after a few months of consolidation. You're finally getting the breakout. The weekly timeframes look gorgeous, a beautiful leg of weekly expansion, but we are pulling away from the 12 EMA in a pretty big fashion. That being said, if we do pull back, phenomenal area for some re-entries on those longs. And although some companies have ran away, they were good buys for a long time, guys. But now, you know, these moves that we're seeing now in some of these semiconductor names are a little bit extended, right? ASML, I'm a big fan of playing if we get a pullback down here under 900. Big fan of playing all the way back down there. Micron as well, super extended move right now. An amazing move, and I made a lot of money on this move, but still, we can't lie, it is very extended. Micron has earnings tomorrow. Keep that in mind, very extended on the daily time frames. Very tough to chase this one all the way up here. Companies like LRCX as well had a phenomenal breakout from prior all-time high ranges, but now this move is also very extended to the upside. So it's extremely tough to start chasing these names all the way up here. If you missed them, you missed them. They consolidated for a long time, but now you can see the size and speed of this move is something that does not usually happen on these names, nor LRCX, nor ASML as well. ASML, this is one of the fastest moves we've seen on this company since the early move in January as well. I do still think it's going to keep going, but maybe not keep going in an absolute straight line. Maybe do it in waves or in legs, right? So I'm a big fan of accumulating these when they're cheap, such as ASML and Micron, as I was kind of guiding on the channel down here, right? But now at this point in time, you are fairly late, so please try and go shopping for some names that maybe have not had those types of moves that are still very high quality. Moving on to the IWM Russell right now, the Russell up 0.58%, still very strong. Daily uptrend is maintained, and the weekly is also maintained too. This weekly chart is looking really good, but as I've been very clear with on the channel since the rate cut day, it's a nice area to build a position on the Russell, but further buys need to possibly be done in the event you get the infamous backtest down here, 232, down to about 226. You're just looking for the breakout, the retest, and the possible run. So I am a fan of building some positions on the Russell here, but when I'm building these positions, I fully understand that we are extended right now on the move, and you might just need a DCA approach to this one in the event that the markets, because we know the SPY, the QQQ are kind of away from their 12 EMA, the Russell is as well. So whatever the next catalyst is for a market pullback, it probably will make us pull back for a nice 2-3 weeks of time. Some of the growth sectors obviously will get hit the most, and as a result, you should have some buying power to buy the DCA dips, right? Moving on to other sectors today, we'll do a bit of a broader market analysis. Consumer staples. Consumer staples, probably a lot of money rotating out of these, out of names like Coca-Cola in the last few weeks, names like Pepsi also taking a hit to the downside, names like Colgate-Palmolive, which have just been down for a while now, but now flushing a big area, companies like Clorox, etc., etc., etc. The list goes on. You could bring up Procter & Gamble, that one also suffering to the downside. So all of XLP coming down, and this is kind of reminiscent of a move that I remember from November leading into early January, when consumer defensives had one of their worst stretches in market history. It seemed as though every single day for 3 or 4 weeks, they were just red. And this is kind of the exact same environment right now, but I am starting to be a big fan of playing it down here, 78 down to 76 on the XLP. Phenomenal area, guys. Whether you look at this chart on the weekly and or the monthly, this is a huge area of prior resistance, should be current support, at least it has been support for an entire year, almost, dare I say, a year and a half at this point. So I am a fan of playing this area on consumer defenses. It's just a question of rotation. These companies are probably going to do just fine over the medium to the long term, but right now a lot of investors, both retail and institutional, kind of really having a lot of FOMO, especially for the data center plays and other plays of that nature, and probably chasing a little bit of growth right now with the rate cuts. It makes perfect sense, but the money eventually will kind of make its way back into here if people are looking for varied exposure, right? Just to kind of manage their concentration risk to other plays. Moving on to utilities right now. Utilities, very solid plays right now on utilities in my humble opinion, but it might not be the utilities plays that you think, right? A lot of people are playing some of the energy plays, some of the critical minerals plays that have ran really hot recently, but some of the names, in my opinion, that are maybe the best valued amongst the bunch, right? Because we have names like Constellation Energy, which are just printing the highs right now, very solid, but the valuation is somewhat questionable. One of the ones that I really enjoy right now is VRT. VRT, guys, I think that, VST. So Vistra Corp, I think this one is really, really good. They do natural gas, they do nuclear, they do solar, they do energy storage as well. And the valuation, although here it's a little bit, well, it's not as good as it was down there at 170, as you can clearly tell from this analysis, but at 220, it's still very manageable, as opposed to other companies, not to name them, but you guys know which ones, some of the energy plays that have just been running, almost vertically here, some of the smaller cap ones. This one is very, very, very solid. It's not that small cap at all. It's a well-established company, and I do believe the price action looks really good for some possible continuation to the upside. This is probably one of my favorite utilities plays if I'm looking for one. And another company might just be something like Next Era Energy. Also, consolidation pattern looking very strong. They do wind, solar, storage as well for energy, and I do believe that this one, after a very long period of accumulation, might just now finally be ready, as obviously the power requirements for a lot of these data centers are going to be absolutely massive. You got to look for the companies that are in the best position to kind of fulfill those power obligations right now. Because of course we could talk about companies like SMR, we can talk about companies like Oklo, but those companies just don't have any revenue just yet. They've been phenomenal trades off of hype and momentum alone. This is true, right? But they cannot supply any power right now. So right now, these companies are currently pricing in the next 5 years worth of revenue, even more right now. So it raises the question, like, what's the compound annual growth rate of return if we invest in these types of companies here when they can't bring in any revenue until 2028, right? So we are very late on those plays. So we kind of have to go shopping for some plays which still make sense, which can provide the power right now, and we'll see increases in their revenues and earnings per share right now. That's why I was looking at those, right? Moving into XLRE, into the real estate names right now. Real estate, I mean, getting hit to the downside, but this is very, very logical, and I brought it up in the summary, or the introduction of the video rather. Very simple to understand here, guys. The market got one thing right, one thing wrong. What the market did get right coming into the rate cuts is the amount of rate cuts in 2025. The market priced in 3, and the Fed also gave us 3 in the summary of economic projections, right, with the federal funds rate by the end of the year. What the market did not get right is the amount of rate cuts into 2026. The market was pricing in between, at one point, it was pricing in 3 to 4. Prior to the meeting, it had reduced those probabilities to 2 to 3 rate cuts, more leaning towards 3 in terms of the probabilities. And the Fed came out with a summary of economic projections, which only showed 1 or barely 2, depending on the dot plot projections from various Federal Reserve members, right? But as a result, you have to kind of price out 1 to 2 rate cuts in 2026, just because the market got it wrong. So as a result, yields have been upswinging since the last Wednesday's meeting, and some of the interest rate sensitive sectors have been hit. Now, I still do believe that real estate is a very nice buy right now, and if you're not too sure which company to pick, well, the XLRE real estate ETF is probably going to be a very good place to start. It provides some broad diversification and prevents you from choosing one company, which might not be the correct one, unless you guys are really good at picking real estate companies. A few names that I'm paying attention to in terms of the REITs. Vici, not a bad buy down here at the $30 range. Tremendous dividend, is that if that's your type of thing. Also names like O Realty Income Corporation, not too bad, but also we have to talk about some of the home builders names, which has just been coming down. XHB and ITB. I think we're getting into a nice area for some reload longs on these various swing trades, and even individual names such as BLDR, giving back most of the pre-interest rate cut earnings rally that we, well, not earnings, but pre-interest rate cut rally that we had since the month of June, now possibly pulling back a little bit, providing some great re-entry opportunities, because rates will be coming down. It's just the market got a bit of ahead of itself in terms of how many cuts for 2026, but I do believe it will kind of reignite these rate cuts will reignite bullishness surrounding real estate into 2026 and even 2027. And if you want to take advantage of maybe some of the mortgage companies on some dips, like Rocket Mortgage going for a bit of a backtest down there, companies like maybe Loan Depot, or I know a few people brought up in most recent weeks, Fannie Mae, Freddie Mac, types of things. of that nature, right? Not bad plays right there. Just looking for some clear backtest levels across some of these names, all things considered. So keep all of that in mind. That was a very broad sector rundown. I do those for the Monday and Friday videos. So now let's jump into some other names, such as the VIX. The VIX up 4.08% today, off of nothing whatsoever, right? Just some overall market volatility. Some sectors up big, some sectors up down, but the VIX, right, still just doing a whole lot of absolutely nothing. So we'll see what the next trigger is going to be for the next burst of volatility. But as of right now, we just don't have one. So still a nice location down here to be shopping for some lead call options on some things left behind. I got a new one as well, which I'll show you guys at the end of the video, of course, when we go through the portfolio. And if you get a nice upswing on the VIX right here, nice chance where there's going to be more volatility in the options chains, nice opportunity to sell a bunch of puts in the market. And usually when we get these quick spikes, I'll tell you guys, right? Not only weekly sell put options, but also sometimes some of the 3, 4, 5 week sell put options with a lot more volatility and great levels could be a nice time to kind of lock those in when you get these little bit of volatility events in the market overall. Moving on to the yields. The yields, very clearly, I just explained when we went through real estate what exactly happens. It's the discrepancy between the market's prior expectations of interest rate cuts into 2026 versus what the Fed had penciled in on the summary of economic projections. So there's a bit of repricing here, but I think the trend right now is still clearly established. At least it has been over the course of the past couple of months. Clear weekly downtrend on the 10-year, looking to backtest 4.2 here and maybe continue on to its slow descent. And the 20-year yield's kind of the exact same thing, right? Just looking for the breakdown, the backtest, and possibly the rollover. It's going to take some time though, which is why I've been saying for the longest time at this point, TLT has been and is still a very nice trade, but it requires a lot of patience and it will not move very fast. So please keep all of that in mind. Moving on to gold right now. Gold kind of peaking out right now at a beautiful day on the Monday session, 1.67% to the upside. Really nice daily uptrend follow through right there, but the bulls might just be getting a little bit tired. As you can see, this slight bearish divergence on the chart versus the RSI right now. In the event you go for a bit of a higher low, you're looking for anything above 36.31, bit of a daily higher low for possible continuation. Am I playing gold up here? No, not really. It's a bit too extended for me right now. Beautiful weekly expansion. That being said, nice, gorgeous weekly uptrend. We're a bit too extended from the weekly 12 EMA for me to chase this one up here. However, if we do get a back test down there for whichever reason and come back to the 12 EMA, let's call it 35.25, maybe by the time it curls up 35.50, I might just be interested in possibly positioning for some swing trades, for some continuation longs as we consolidated for months and months and months. Now you got the breakout, but definitely don't look at this 12-month chart, guys, or the monthly charts. You're going to get a little bit of vertigo, right? The RSI on gold right now is almost 90. I mean, you'd have to go back in history to find it's only done this a few times to where the RSI has gotten all the way up to 90. And that's usually been synonymous by being very close to a local top. So gold really getting the expansion, but it's really tough to position up here. And if you do position, please do trade with a stop loss, because at this point in time, saying you're late is kind of an understatement, right? Now that's everything for our overall market rundown. We could do a little bit of crypto before our individual names. Taking a look at Bitcoin real quick, down about 0.41% rejection from the resistance range we were pointing out, 119, 120, all the way down to about 117 is this $3,000 resistance range. Sadly rejecting from it, and in the process, we did lose the daily uptrend by losing the daily higher lows, which were previously right here at about 114.5. And now we're just consolidating. Consolidating into what? Weekly consolidation, guys, quite simply. Weekly downtrend, you got the lower high, now it's up to the bulls. We were saying this is a nice 618 retracement. It's up to the bulls to reset the weekly uptrends. If they can't get it done, we're just coming right back down here, 107 down to 100 for the possible final leg of weekly consolidation. That would be 3 legs down into nice support, and would also be synonymous with some beautiful monthly consolidation on this chart. The bulls are still very healthy, but consolidation is very normal for something that rallied this much after the April lows. And I will be a buyer once again, 107 down to 99, selling some short puts at every chance that I can possibly get, and also accumulating some positions on Bitcoin if we make our way back down to that price. On to Ethereum right now. Ethereum as well, over the course of the weekend and into the Monday session, was down. Ethereum, this one unfortunately trapping the bulls, right? They looked like they were going for the expansion, trying to reset the daily uptrend. Sadly, people must have gotten trapped. And I was saying, you know, It's very simple, guys. If Ethereum doesn't pull back to 4,000 and 3,700, I'm just not interested, right? I'll be patient. And if I don't get it, there's tons of other plays. And I have so much Ethereum already that I accumulated at the lower levels. We were talking about this stuff on the channel over the past year, right? That being said, weekly downtrend possibly in motion for Ethereum right now. And as a result, maybe further monthly consolidation too, similar to Bitcoin right now. Beautiful engulfing move. Might just be looking for the infamous cup and handle, the infamous monthly breakout and retest, everything at the same time. 4K 3,700 is the area that I'm going shopping for this one. If you guys want to sell puts under it, right? Whether you're using, ETHA, ETHE, ETHU, 2x leverage, BMNR, or whatever you guys are using, please always just remember to use the Ethereum actual chart as your guide in terms of time frames, because all those other proxies, I mean, they all start right here on this chart, yeah? So that's pretty much everything for our market rundown, guys. Hopefully you enjoyed that. Now let's dive into our big tech names and then everybody's favorite section. And I keep getting closer and closer to the camera, but I'll try to stay this far away right now. So first, moving into Apple right now. Apple up 4.31%, fantastic, getting several analyst price target upgrades, and the pre-order and actual live sales for the iPhone 17s are going quite well. And we were kind of hinting at this, that the fact that this dip on Apple was probably the last chance to dance. Nice little backtest here on the weekly, and now the bull's going for the full leg of expansion. Next target right now, 260 psychological, looking very good, almost back to the all-time highs. And this, guys, was probably the best catch-up trade. We were talking about it for so long on the channel. Hopefully you guys are able to really profit from this one a lot. Apple now finally back into positive territory. It was the biggest laggard of the entire big tech segment, and now I'm happy to say that it's played a lot of catch-up, and congratulations to everybody who was able to position. But now in terms of positionings, guys, right, you're a little bit late. I wouldn't be chasing this one. There was a time to play Apple, and that time is unfortunately behind us at this current stage. In the event, however, we get a bit of a backtest down here. You're just looking for a higher low, anything above 236, looking for a new higher low. The valuation right now, though, is way too high for me, and the price in terms of expansion of the technicals is also really high for me right now. So no further entries. If anything, these are kind of some of the tentative take profit zones. Moving on to AMD right now. AMD, not too bad of a day, 1.52%, but obviously not getting much love from the NVIDIA headlines. NVIDIA's just been stealing all the headlines recently, and AMD's kind of left behind. But that's okay, and AMD is still in a nice position to be accumulating, and the long-term thesis on the company has not changed. We are still trading at really attractive multiples right now, around a 1.3 peg, and the expansion of revenue and both EPS are phenomenal over the next couple of years. That being said, in terms of the technicals, it's a bit choppy. We're getting rejected from resistance, 170 down to 157, and as a result, on the weekly timeframes too, we are just consolidating here at the lows. The bulls are still trying to set the infamous weekly higher lows, possibly go for some further trend expansion. If you look at this on the monthly as well, it looks gorgeous. Massive monthly engulfing move, cup and handle, breakout retest, everything at the same time as well, looking for that expansion. So I'm still a big fan of selling some puts on AMD down here in the lower 150 to 140 range, and also accumulating some more swing trades for some shares that we can possibly carry into the next leg of monthly expansion, which I do believe will be coming probably sooner than later. Now moving into Amazon. Amazon down 1.66% on the day, unfortunately, but still a fantastic buying opportunity if we were talking about still some of the names that are lagging behind the rest of their peers' performance. We obviously have to bring up Amazon too. Amazon only up 3.76% year to date, although having very strong fundamentals and multiple lines of businesses which are expanding really, really well, especially as we saw after the last earnings season. That being said, Amazon coming back into support again, 227.5 down about 219. I really enjoy selling some puts and or accumulating shares or leap call options on Amazon in this position. Amazon possibly will not be around forever at these levels. It's looking pretty good on the longer time frames, especially when we look at the monthly, just looking for a nice engulfing move, bit of monthly consolidation, and possibly looking to put together a bit of a run, maybe into Q4, but especially into 2026. Still one of my favorite buys in the market right now. Moving into Google right now, Google down about 0.92%, but they had a phenomenal rally. And right now, the bulls are still in full control. Your daily higher lows are set at 246.41. In the event that you lose this, you're just going into a bit of daily downtrends and possibly some weekly consolidation. The same things that other stocks that have looked like this in the past, such as Netflix, such as Microsoft, eventually they did come into weekly consolidation, and Google might just be next up for that. But phenomenal gains on Google right now. I'm very happy to be a Google shareholder. I'm very happy that I was really telling everybody on the channel for the past year and a bit, guys, that a lot of the fears around Google were kind of overblown. The Department of Justice the Department of Justice lawsuit would probably not come to a breakup of the company. And I'm really happy that those two parts to the thesis puzzle have played out almost perfectly. Although right now at 252, Google now is in the nibble territory and no longer a full buy as it was in around the $200 or less range. Moving on to Meta right now. Meta down 1.7%. Sadly, not able to crack above a new all-time high for Meta. It's been a while, guys, that we've had a positive news catalyst for Meta. It seems as though all the other companies have been getting positive news catalysts. Amazon with their grocery business expansion, AMD and NVIDIA with various investments, Apple obviously with the recovery story there, Google with obviously its piece of news too. But the only one, Microsoft with the data centers, the only one that I haven't heard anything about since earnings has been kind of Meta. But it doesn't detract from the fact that this is a very, very solid company right now, trading at an okay valuation, looking at about a 2.27 peg. That being said, the daily uptrend is clear as day right now, looking for a higher low, anything above 744, looking for that. And in the event they unwind and go for a bit more consolidation, well, pay attention, guys, right? 722 is your weekly lows. The weekly chart not looking, it's not looking bad, right? It's just not looking as strong as some other names out there, but still just kind of some really wide consolidation right now from Meta. Still a solid company and still one of my favorite ones in my long-term portfolio. Moving on to Microsoft right now. Microsoft down about 0.67%. Not the worst day for Microsoft, but still one of consolidation. That being said, who's in control? The daily bulls. Nice daily uptrend breakout pattern right now. At this point, anything above 506. Looking for further follow through in the event you unwind this move right there. Sadly, daily downtrend comes back, and that would be a lower high on the weekly, and you might just be looking out for possible weekly downtrend and just possible further monthly consolidation. The same area that I want to buy Microsoft has been the same area for the past, 2 months. I've been calling out this area, 470 down to about 460. If we revisit there on Microsoft, I will play. But as of right now, Microsoft still remains a hold for me. No swing trades in terms of short-term price action, and also no big net new additions in terms of shares. Moving on to Netflix. Netflix up 0.03%. Very flat day for Netflix. This area is like a magnet. 1210 roughly, down to about 1180, 1185. Big magnet here, essentially over the past month and a half. No clear breakout, but the bulls are currently holding on. In terms of the weekly, it's just also very awkward sideways consolidation right here. You could argue they're trying to build an accumulation for a breakout. The reason you would have a bullish leaning bias is just because the bulls still do control the monthly timeframes, and the indices are also higher too. That being said, Netflix, no swing trade for me on the company, and this one at these current prices remains a bit of a nibble. It's not a full buy right now, it's just a nibble. The full buys for me really would have to come down into the 12 EMA down here, 1100 down to like $1,000. If you do come down there, kind of like Microsoft, that'll be the next area that I would add some decently sized share positions to my existing share positions. Moving on to NVIDIA right now, obviously with the OpenAI news, NVIDIA benefiting a lot from this deal and up 4% in the trading day. That being said, daily uptrend breakout is clear as day right now. Fantastic, not new all-time highs, but very close. At this point, any pullback, anything above 168.56, looking for a new higher low, possible for some trend continuation. If we just break through this area, that would be kind of the best case scenario, because then you would line up one of my favorite plays ever, which would be the infamous breakout retest, right? Break above here, get a little bit extended on the short-term timeframes. Back test might just be a nice area for the re-entry longs. There was some swing trades down here. We talked about them last week with the stop loss below there, right? The entry criteria was right there. And then pretty much going for the expansion, all-time high, take profit number 1, and then psychological 200 for take profit number 2. Solid move on NVIDIA. fantastic company, nothing bad to say. As a matter of fact, you know, I've been saying the same thing since the NVIDIA earnings, right? It was an overreaction to the downside. People were skeptical on NVIDIA for the wrong reasons. Their earnings were phenomenal, in my humble opinion. And now it's really just being a question of the companies following through right here, especially on this technical breakout pattern. Moving on to Tesla, another name that's benefited wildly over the last few weeks from the buys from Elon Musk back into the company, $1 billion of stock, to the interest rate cuts and everything in between, renewed investor confidence, et cetera, et cetera, et cetera. Very strong push on Tesla. However, a little bit extended for me right now. 78 on the RSI. Big breakout candle here again. On the weekly timeframes, you see this even better to where weekly is looking great for some continuation, right? But you're kind of at the top end of a lot of the price action, right? 440 all the way up to like 450, 460. It's really the top end of the range. And with this move, I mean, the move can continue, right? But the question is, do we backtest this area first? If we do get a backtest, that might be an area I would be interested in playing some smaller term short-term swing trades, essentially, right? 405 down about 385 is the infamous breakout retest level. So pay attention if it gets down there. I'm personally not buying up here, but I would consider it if we get some price action back tests. If not, tons of other companies for me to play in the market. Moving on to Palantir, let me just check the time of the video. Okay, we're not doing too bad today. Moving on to Palantir right now, down 1.68%, but Palantir bulls are in full control of this chart. Beautiful back test after last Wednesday's Fed event, excuse me. Daily uptrend, looking for some new daily higher lows. Anything above that low, 160, just looking for a new higher low for further trend continuation. On the weekly time frames, the bulls never lost control at all. It's always been a weekly uptrend, except for this retracement size was pretty large. And we hovered around there for a while, right? This whole 150 to 140 range. Now the bulls are looking for more. If we go into some form of an awkward tightening range, at the top right here, I think it would be the best possible case scenario for Palantir. It allows the company to grow into this crazy valuation right now. Of course, they're getting more and more commercial contracts every quarter. They're getting more and more government contracts every quarter. We just saw recently they signed a new contract with the UK, possibly going to get some contracts as well for military purposes and or commercial purposes across European countries too. So the expansion of Palantir is still well underway in terms of the company. But we know the stock price is a little bit rich right now, so I'll be trading this one level to level. As of right now, no swing trades for me. Moving on to SOFI right now. SOFI up 1.02%. SOFI cracking above the infamous $30 range, and that also is the take profit area. I'll remind you, when we were building swing trades from down here, we were saying $30, psychological tentative take profit zone, and now we've officially reached it again. SoFi's come a long way, man, since the April lows. I remember we were talking about it down here, accumulating a whole bunch of shares, and now we are finally seeing the profits that we arguably do deserve. Weekly uptrend, clear as day right now. In terms of the weekly, your higher low is all the way down here again at 23.55. SoFi, very extended right now in terms of the technicals, right? Especially in terms of the weekly time frame. I mean, the RSI doesn't lie right there. Sure, can it go for more? Yeah, but I'm not in the business of chasing this one here, especially when there was clear either trading areas, such as this location, and or clear accumulation areas, which the last time was also down here for some shares, and or well below earlier on this year. Right now, are you late to SoFi? Well, yes, in the short term, but maybe no if you have a longer term vision for the company and you're looking for market cap expansion to 40, 45, 50 billion. That is always possible, but will you have the exact same amount of gains as people that bought down here in such a quick time period? No, probably not, right? So don't chase the market, guys. Let the market come to you. If you missed this one, it's fine. No need to have absolute FOMO and just load up the entire portfolio with SoFi calls. Sometimes it works, but a lot of times you might just end up disappointed chasing other people's gains. Moving on to Uber right now. Uber up about 0.89%. Uber cracking above the infamous $100 range for the very first time, looking quite good. Daily trend expansion, not looking too bad at all. And on the weekly time frame expansion, looking pretty good too. The bulls never really lost this weekly, right? It's been challenging for them for a while, but they never lost it. Beautiful leg of expansion right now. So in the event we get a pullback, another phenomenal location to be selling some puts down here in the lower 90 level now that we've officially claimed these highs. any pullbacks, I will be a pretty big fan of playing some Uber short puts down there around the 90 range, and the valuation of Uber around the $90 range is still quite good, and they are expanding, everything, right? Mobility, deliveries, very solid numbers, monthly active users, very solid numbers of expansion, and of course expanding the robo-taxi partnerships almost virtually every single week or two. Moving on to TSM right now, TSM up 2.93% for obvious reasons, right? NVIDIA needs more chips, OpenAI needs more chips, everybody needs more chips. A lot of them are partnering with TSM, guys. There's just no other way around it, right? Which is why TSM has been and is still one of my favorite companies in the entire market right now. That being said, is it extended? Absolutely, yes. Your higher lows right now are 257.59. You might just be looking for a new higher low for some trend continuation. Daily bulls are in full control, but I'd be lying to you if I said that this one was not extended. Very extended from the 12 EMA right now. However, if you pull back for XYZ reason in the markets and we can find maybe 250, 240, backtest of the prior resistance range highs and backtest of the 12 EMA, it would be a clear example of a beautiful, another breakout retest and run trade for further continuation on the weeklies, but also on the monthlies as well. I'm pretty much full for TSM right now. I have all the shares that I could possibly want. I've been in this company for years and years and years, looking very good. Is it a good buy up here at 272? Well, now is when we have to pause a little bit, right? Because it's not as good as it was at 230, even at 240. Now it's 272. So if you want me to do the valuation here, right? 272 by 230. The last time we did this is 1.18 times the peg ratio. Right now, you're sitting at a 1.65 peg. So it's not cheap anymore as it was under 230, but it's also not expensive. So I assume it's a bit of a nibble, but maybe no more than that, right? Definitely not a full starter position for me, just a nibble and some possible DCAs coming on later on in that trade. And that's everything I had for you guys for the market rundown today. Hopefully you guys enjoyed that recap. And now we're going to move on to everybody's favorite section, which is going to be the biggest gainers and losers of the day. And then we'll wrap it all off with my portfolio. So let's jump into that right now. Okay, so we're going to start off with some of the biggest losers of the day. We're going to start off right now with Open Door. Obviously, Open Door is the same trade that it has been this entire time. It's just a pure lottery trade. So in the event that we wanted to play this one, very simple. We got to go far out on the options chain, possibly January 2027, slightly out of the money covered, slightly out of the money call options. But additionally, we can build some spreads on these types of trades as well. That provides us some good risk to reward profiles without taking on too much cost up front, right? So I was building a few of these for our Discord members today. In the event we wanted to build, like, let's say a debit spread, like a longer duration debit spread on this one, we've got some good risk reward profiles right here. If we were to buy the $10 call and against that one, sell the $20 call for January 2027, you can see the cost of this trade is actually quite manageable, right? We're paying about $1.10 and we got $10 of possible upside, right? So the risk reward profile on this one is very, very, very solid, and it prevents us from having to pay, $4 for some leap call options here, which gives us a pretty high break-even price. Now, Open Door can move a bit more, but there are ways to structure this trade. This is just one of them, and or possibly selling some put options down here if you wanted to buy the dip for some shares. It has some macro tailwinds, being the interest rate cuts and possibly their ability to execute on their business model a bit better than they did back in 2021 when they were just buying homes at any price and then losing money on a lot of them. BMNR, still one of my favorite Ethereum proxy trades right now. I am using the sell put orders to kind of get into the stock in the event that they want to assign me. At the same time, mid 40s, right? Not too bad of a position for me. So that is the area that I will be targeting. And I'll show you my new position on BMNR over the course of maybe in the next 10 minutes when we go through the portfolio. But this one is very clear. Tom Lee wants to accumulate about 5% total ETH. So obviously that would be equivalent to roughly $27 billion. There might still be a 3x left in this stock at current Ethereum prices. But obviously if the price of Ethereum runs higher, well then BMNR will run higher as well. So you got two possible upside catalysts. One, further accumulation of ETH, which will drive up the market cap. And then number two, the possible price expansion of that ETH. Now moving on to Celsius Holdings. Celsius Holdings, interesting area for a back test. So keep that in mind, right? Nice weekly breakout, retesting, beautiful support right now, 51 down to about 45. So possibly a short put candidate down into this lower location. Moving on to Bros right now. Bros also coming back down into a nice area of support, 53 down to about 44. The only one problem that I have with this company, guys, is it trades really rich. Beautiful company, beautiful business model, but sometimes the stock price is not the same as the actual business, so keep that in mind, right? However, it could be interesting to play for some swing trade longs if you make your way back into there, as now we have been consolidating on this monthly time frame for a while at this current stage. Moving on to Toast. Toast also coming down, this point of sale company, right? Very interesting terminals. You see them a lot across small and medium-sized restaurants out there. Maybe you've seen their point of sale terminals. Very nice, very user-friendly as well. That being said, they dropped today because they were noticing, or some analysts had noticed, that Toast had dropped the price of some of its point of sale terminals and the price of its subscription service fees. Now, there's a few reasons that could possibly be happening. Number one is they want to offer the service to more amount of people and make it more accessible to people. The other thing is that there might be increased competition. As a result, they're trying to compete on price. Obviously, one part of that thesis in terms of offering the service to more people is bullish for the company. The second part being the fact that there's more competition. As a result, they have to compete on price. That's not very good for the company. So it's a bit of a push and pull thesis right here for Toast. One thing is for sure, though, in the event we pull back down 36 to 33, not a bad location. Company has some really solid fundamentals, interesting play, and I will be playing some short put options down there into that support range. Been waiting for these for a while, and now they're kind of finally here. A couple more we can do, types of names like Circle also, nice little crypto play. Short puts, in my opinion, 120 down to 105, not bad, and also accumulating some shares in these lower locations as the bull and base case scenarios for share price expansion into 2027 definitely makes sense at these lower levels. The risk reward is quite decent, in my opinion, down there. Moving on to, some of the home builders, right? The home builders have just been winding down everything. Lennar had their earnings last week. So you can take a look here. Beautiful expansion over the last couple months, and now the home builders are pulling back. So whether you want to play these individually, you can look at Toll, you can look at DR Horton, you can look at KB Homes, so many other ones. My favorite way of playing this one is either through the home builders ETF XHB, backtest of the lower 100 levels right there, or the home construction ETF as well, backtesting as well of the lower 100 ranges, possibly a nice reload area if you're looking to play the home builders into 2026. Not that bad at all. Additionally, companies like we talked about earlier today in the video, Rocket Mortgage selling some put options down here, 18 to 17, not a bad location for accumulating some shares, but also possibly not a bad location, just looking for some monthly pullbacks here to possibly accumulate some more swing trade longs. As of right now, I'm only selling puts. But if we come down there in terms of price, I might also consider opening up some call options. Again, you guys know I had some call options here. We closed half of them when we came into the 17-18 area, closed the other portion of them when we came up into the $20 area. If you come down there, I might just be adding more, or rather positioning into this one too. A company like Resolve, which made its rounds on social media, of course, over the past few weeks because of this ridiculous rally that's now pulling back. You can approach this one the same way we kind of priced out the open door contracts earlier. Call debit spreads with some long duration are not too bad of a deal. As we know, the options chain right now is absolutely juiced. So if you guys want to pay $3 for a $12 call, which requires a $15 break even, so the stock needs to 2x, more than 2x to break even, that's one way to do it, but you're paying a lot for these call options. The other way to do it is just structure some sort of a call debit spread like this, right? A longer duration call debit spread, and you just buy, let's say, the $7 call, cap it all off with the $12 call. Additionally, too, you'll see that in terms of price paid right here, you're paying about 60, 70 cents, and you got $5 worth of upside, right? So decent risk to reward, and you can have multiple contracts. It just kind of saves us from volatility crush or sideways price action, which is not too good. In terms of selling put options, you'll also see that I did sell one put option. The only problem with Resolve, it only has monthly options expiry, so you really got to be patient and wait for this one. We actually sniped this one when it had this massive candle down there over here, right? This massive 8% candle. We were able to get it. I didn't get filled at this one. I noticed it a little bit, well, while it was happening. I got into the trade a little bit late when it recovered right there, but I'll show you guys what we did. We wrote the $5 short put options for the month of October. I'm fine playing a pullback on Resolve down there at 5. Moving on to other names, right, such as SMR. SMR had great price action on the Friday session, up 22%. Oklo as well, having a very good day on the Friday session, but I didn't see you guys. SMR, not a bad candidate for chasing the nuclear play, but in the event you guys wanted to avoid chasing individual names like SMR and Oklo, you can play some nuclear ETFs, such as Nukes, NUKZ. It just prevents you from buying one company and going all in on that one company. You can play an ETF for that purpose, right? And even a company like SMR, if you get a pullback down here, a couple of people were asking me, can we sell puts in the new region right here, which is 38 to 36? The answer is yes. When we were down here, we were selling put options down here. Now that we've actually claimed the level again, and we're looking for the back test, not a bad location. If you're positioning with some call options or some shares, just only risk what you're willing to lose, because don't forget, none of these small modular nuclear reactor companies have any revenues whatsoever until like late 2027, early 2028. That's pretty much everything that I wanted to cover here, guys, to the downside. If not, we're going to spend the entire day going through every single one of these companies. To the upside right now, we can talk about a few of these, and these are the names that are really FOMO inducing, right? I see it in the comments. I see it not only on my videos, on other people's videos. I see it on social media as well. Pure FOMO in a lot of the data center names right now, especially the cloud compute data center providers like these. So APLD, I mean, this one's up almost 2x, guys, in like 2.5 weeks, right? We are very late at this point in time. We were commenting all this time back here that APLD was probably a nice little runner if you could sustain the volatility, building some positions, whether with shares or call options. But now it has ran, right? So that being said, this company is currently trading for about $6.4 billion. Never forget how much growth you're actually pricing in for this one, right? It's at the top end of the analyst price targets. The company still loses a lot of money, right? Both on net margins, on EPS, and free cash flow. And revenue this year is going to be $258 million. That's it. So you're pricing in a 10, almost 10 price to sales for 2027 sales. Now, I'm all about buying future growth of companies, but at a certain point, you got to draw the line somewhere. And this is where someone like me draws the line, right? If you get a pullback on APLD, anything maybe under 20 bucks, closer to like 17, 16 for a backtest down there, that'd probably be the next entry criteria. But if it just runs and runs and runs, I just know will not be in this one. And I'm perfectly fine sitting this one out. It was a great time to play this one down there. Matter of fact, we played it a bunch of times, but no running trades for me on this position right now. A company like Iris Energy, same concept. We were talking about it a lot prior to earnings down here. We talked about it after earnings, the fact that even down here, the valuation was manageable. But eventually, where do you draw the line, guys, right? And I do believe the line has to be drawn pretty much very soon on Iris Energy. Fantastic company. We covered that after their earnings. I spent 15 minutes going after the company and why it was such a solid company after their earnings. But eventually you got to draw the line somewhere, and the line is being drawn for me right now. Very extended on the daily move, very extended on the weekly move as well. 88 on the RSI, way too extended from the 12 EMA, completely vertical right now. So it's gone. Iris Energy for me is now a take profit trade for some swing trades that you might have had at lower levels, and or just a hold if you're looking to hold shares for the longer term fundamental thesis expansion through 2027 and 2028. ASTS, not a bad recovery right there. This one was fairly obvious in terms of what they wanted to do on the monthly time frame, right? Just looking for a monthly higher low for further trend continuation. We were commenting down here that it was probably a very nice location to be building some further trades in ASTS or selling some put options down there. Both of those trades would have worked out well. Now the bulls are trying to get this back, trying to get back the support range that we just broke through again. 45 down to roughly 42, not too bad. It's, as I label right here, the closest competition to Starlink. I mean, shout out to Rocket Lab and shout out to Amazon's Project Kuiper as well. ASTS chart is not looking too bad, but once again, you are paying a little bit more than you possibly should be on ASTS right now, as this one, again, is another example of a company that is just not yet profitable, and a lot of the revenue streams will be coming in 2027, 2028. You're literally trading for 17 times 2027 revenues, guys. And those revenues are not even locked in just yet, right? So please keep all that in mind. They will be growing, but not everything right away. NBIS, another example of a company that must be inducing a lot of FOMO into people, and people are probably trying to chase other people's gains. You see a lot of people up a lot of money on NBIS, and now you want to participate too. In my opinion, that's not the way to do things, right? NBIS, we covered them after earnings. last time that they had them, and they had really solid earnings. That being said, where do you draw the line, right? Well, in my opinion, right now, chilling in the 80s RSI is on the weekly with a chart that's almost vertical, up from, 60 something dollars to almost 110 right now. That's kind of where you have to draw the line, right? Beautiful daily trend expansion, though. This one as well is a hold or take profit on some swing trade locations. One of the trades that still does make sense, though, is a stock like CoreWeave. CoreWeave is still down a lot, even though they have recovered a lot from the lows. The thesis that we constructed after their earnings is still quite clear. By 2028, in terms of price expansion multiples, whether you have a base case scenario or a bear case scenario for price to sales, right? Well, the expansion case for the thesis is still very good. You're looking at a very high share price target, and the stock is currently still trading quite low. So this one, if I'm looking for a data center play that's been a bit left behind in terms of the rocket recovery rallies, or rather rocket rallies, rocket mode rallies, right, that we've seen on NBIS, APLD, Iris Energy, CoreWeave might be the most decent play amongst those players. So playing short puts on any consolidation or possibly loading up some swing trades, not the worst opportunity in the world. Moving on to a company like Symbotic, and these are some of the last ones that we'll do. If not, we're going to be here all day. Symbotic, phenomenal move here off the lows, looking very strong. We were saying that this was probably the nicest area to position for some further swing trades because we were just going for some monthly consolidation. On the monthly, you can see that very clearly. On the weekly, you saw that as well with the back test down here. And now Symbotic is kind of pushing the levels again. Really strong robotics companies, probably one of my favorite out there in the market right now. It's just a little bit tough to position up here at the current stage. It is, roughly... Well, let's just say it's more expensive than it is cheap, right? Duolingo coming back a little bit. Duolingo still struggling. Duolingo still, in my opinion, if you like this company and you agree with the thesis that, large language models and automated translation services are not going to take away from people's willingness to learn new languages, well, this one is probably still a good DCA territory, right? 300 down to 270, we were saying, not a bad location to build some initial shares, and then 240 would be the next area to build out some shares. Keep in mind that the company in the 300s does trade at some pretty rich multiples because they are growing revenue and EPS very aggressively, but nice little pullback area on the chart. Wouldn't mind increasing my position on Duolingo a little bit. Oracle, we were commenting on their earnings that they're pretty richly valued up here into the $300 range, both on a forward price to earnings multiple and a PEG ratio as well. So please keep that in mind. Oracle, very tough to position up here. For me, this one would remain a hold or a take profit on some things. Moving on to Rivian right now, the company that's been making the rounds across social media again. This one is not terrible, guys. The only reason that it's not terrible is because it's currently trading for about 18.5 billion market cap. They are bankrolled by Volkswagen. They do still lose money on virtually every single car that they do produce. This is very normal as they scale. 18 billion market cap. Let's have a look here, fundamental wise, right? 2026, 7 billion in sales, 2027, 10, and then 2028 projections for about $20 billion in vehicle sales. This one, not a bad play, but you will have to be patient on it, still consolidating, but building some swing trades with some either shares or longer dated call options. Not the worst proposition in my opinion. I actually like it. I just wouldn't be going too heavy in it. We already talked about the other ones, such as VRT, AMAT, following LRCX and ASML up. And the other ones as well, I believe we already talked about. Shout out to FICO, though. FICO, it was in our analysis last week as part of the whole fact set, SPGI, Moody, sell-off, FICO as well was down. FICO, guys, solid company, solid long-term company, and still a decent buy for a long-term portfolio in around these levels overall. And I think, guys, that that's it. If not, as I said, we'll be sitting here for a while, but we covered a ton of stocks in today's video. So hopefully you guys enjoyed all the stocks that we did cover, and hopefully you guys enjoyed the entire video so far. Now, I'll be giving you guys a very brief rundown in terms of the trades that we took over the course of today and which trades I have into next week as well. Before we do that, I'll just give you guys a quick little recap right here since I didn't get to see you guys on the Friday session, right? So here are all the trades that we were able to close last week. You'll see a bunch of wins here on the wheel strategy. A lot of these names were available in the top 5 options playlist last week. Some were, some weren't, but as you guys can see, I'm a big fan of playing pullbacks on big red days. It frees up some phenomenal strikes on some nice companies, and I don't only play the companies with low IV. I play a lot of companies with high IV, BITX, BMNR, USAR, NVDL, 2 times NVIDIA, Rubrik, NBIS. Can you imagine we got a 75 put off? That's pretty crazy, right? AMD, Oscar Health as well. One assignment which was called away on CoreWeave. We were assigned at, well, 101. We brought the cost basis down a lot. We repositioned at 98 and we got out. We made about 0.81% per week, which is very strong. Directional trades, a lot of our directional trades were closed. Meta hitting our take profit target at 785. Position was started about 750. Made some decent money there in terms of ROI. KWeb hit our take profit as well into the low $40 range, 42 to 44. 84% ROI on those leap call options. The Google call debit spread leaps hit the top end of our strike, 250 calls. So as a result, we closed those for 117% ROI. The Micron call debit spreads, which were started at the April lows, hit the top end of our 170 strike. We closed those for 240% ROI. I love those two positions, guys. I love them. But at the end of the day, a target is a target, right? And the target was reached. And lastly, we had one tiny little open door short put, which of course ended worthless. So very nice week in the markets for us last week. Closed a lot of the gains, freed up a lot of buying power. But with that buying power, we're not just sitting in cash. I did reposition a little bit. So you'll see some of the trades that I have running right now in the portfolio. If you just bring this out right now, we actually had a nice day. This negative daily right now is just the pre-market or after hours numbers right now. But you'll see the rest of the positions are the same. Some of the highlights that I want to bring is the new call option that I have. Visa, June 2027. We're looking at 320 calls, which at the time I took them were about a 70 delta. We paid about $61.60 for them, and they're currently up about 5.2%. Obviously, Visa, we're looking for the same trade that I've been talking to you guys about for months and months at this point in time, just playing the lower 340 to 330 range. I'm looking for Visa expansion into the mid 400s over the next 12, 18 months type of play, which is why I started that leap option. It's just coming to counterbalance a lot of the growth names that we have, right? We got Oscar Health, Sentinel One, those are still there. TLT, which was a market hedge, but now it's turning into a directional play for yields. We have XLV, which is also our other defensive aspect of the portfolio, I guess, with some call options, which are up nicely. Visa kind of brings more balance because the rest of our combo trades or leap call options, look, I mean, we got AMD leaps, we got Amazon leaps, we got CoreWeave leaps, we got NVIDIA short-term plays, and then we have Rubrik leaps as well. So you'll notice a lot of high growth names. Visa is just coming to balance something. I wanted something in financials, and Visa is going to be it for now. In terms of short puts, we still have active right now. We have the Amazon Friday 222.5s. We got those last Friday. I'm still holding. The rest of all these trades are pretty much new trades. BITX, we started last Friday, 52 strike. We're currently underwater, but today represented a phenomenal opportunity to get an even better strike than me. 50 or even lower into the $40 range with the drop on Bitcoin. Solid. BMNR, this one as well, I've been talking about for a while. We got the 47 puts today. I did not get the low of the day, but close. We got about 38 cents, 39 cents for those. Not too bad of a trade there. 47 puts for Friday. We'll see what happens. Intel is a cheeky little play that I did last week. Intel pullback after the NVIDIA deal, of course. Just looking for the good old pullback, right? Phenomenal rally. Pull back into this range. I'm sitting down here at 27. If I get assigned those shares, I won't mind. If we pull back a little more, you might just find me throwing some out of the money leap call contracts at this one in terms of a lottery play. I don't mind playing one contract on the pullback for Intel. Nike, $70 puts. We got those last week as well. We'll hold. This also was featured on the top 5 options play. Nike, this morning, you could have actually got the strikes that we were looking for, talking about the lower or mid 60s, right? 67, 66 strikes were available early this morning. Still a phenomenal play for me. I mean, 68, 67 strikes, apologies, were available this morning. Not too bad of a play there. I'm still sitting firm at 70. Rocket Mortgage playing the pullback, $18 puts. We got these for 10 cents, 0.5% for the week. We'll see what happens. Resolve, as I told you guys, October 17th, $5 puts. We got 60 cents for these. Very solid, 12% for a month. I'll do that. If I get assigned 100 shares, I don't really care. No leaps on them for now. For me though, Toast, we played the pullback on this one. $37 puts for about 20 bucks, 0.5% for the week. Not too bad. We'll see if we get a sign. I'm a big fan of playing Toast in this lower environment. As I said, this whole, 37, 36, down about 33, this whole little pocket of support down there. I've been waiting for it for a while, and now we finally get to play it once again. And now lastly, apparently it disconnected me. So let's, I guess, wait for me to get logged back in here. While it does that, let me just take a sip of coffee. Maybe pause the video. Okay, sorry. And now lastly, XLP. So we played consumer defensives. Very rare do I ever play short puts on this one because the volatility is a bit low, but still I saw the opportunity and I took it. We got 39 cents for the 78 puts, 0.5% for this Friday. We'll see. I wouldn't mind being a sign. It also brings some balance to all these tech names in the portfolio. So we're doing pretty well, right? So those are all the new trades. I still have a lot of buying power right now, still always looking for the next nice opportunities in tech. But as you can see, we're pretty much full up in terms of very large positions. We have some smaller aggressive runners like Oscar, like Sentinel-1, maybe like the CoreWeaves and the Rubrics as well. But I'm still always going to be on the watch for other interesting plays. And in the event that I do find them, I mean, there's tons, right, guys? But I can't take everything. So I tend to take the ones with the best balance between risk and reward, the ones that haven't ran as much, the ones still in decent fundamental locations in terms of, fundamental valuations, but still good upside. So that's everything for the portfolio, and that's everything for today's video. Hopefully you guys enjoyed. If you did, consider dropping a like. Would really appreciate it for the growth of the channel. Consider subscribing to the channel if you're new as well. And lastly, if you have any questions, please feel free to leave them down below in the comment section, and I'll get to them as soon as possible. That's it for me today, guys. I gotta go drive for about 6 hours right now. It's currently about 9 in the morning here, so it should be about 10 for you guys. Apologies for the delays in uploading. Sometimes it's the processing from YouTube, right? Like I get these videos filmed and done and uploaded to YouTube by about 10 p.m. Eastern for you guys. But sometimes YouTube, like, I don't know if it's because I'm traveling across Asia or something and I keep changing my IP, they just hold them back for like an hour and a half sometimes, and it's really annoying. So apologies for the late uploads, guys, but thank you so much for watching again. That's it for me. Hopefully you guys have a good Tuesday in the markets. See you tomorrow evening for the market recap. Peace.